Delivery has been the killer app for Amazon for many, many years. Amazon just doubled down. Amazon beat on a revenue basis last week when they announced earnings, but they did not beat on earnings. The reason why is that over the past few months, they started to announce a big push across millions of SKUs that they're going to be now delivering one-day delivery. And that's expensive. And that's really the main reason that they didn't beat on the earnings was they said, hey, we're going to push into one-day delivery. I bet the stuff from Walmart and Rakuten's trying to come into the US. We're starting to see specialized marketplaces. eBay just announced a fulfillment offering.
Alibaba moving into B2B in the US.
Yeah, there's just a lot more players trying to get into e-commerce marketplaces in the US. And so I bet they moved up these plans to have one-day delivery. I mean, delivery has been the killer app for Amazon for many, many years. That has been a huge investment that they've made. We've cataloged how now the majority of the fulfillment and the shipments on Amazon are actually being fulfilled by Amazon itself. Amazon's fulfilling the majority of their orders.
Meaning they're going end to end on that and not, for example,
outsourcing it
out
to
the last mile to
UPS or someone. Exactly. But now this is expensive. It put up their cost 21%. You can see how expensive that is. Walmart tried to match this, but I think they only matched it on maybe a few hundred thousand SKUs, which is maybe 10% of what Amazon has been doing.
So why is that expensive? Explain that. What are they building out here? What are they investing in that costs so much money?
So I think it's a lot of infrastructure expense. So
warehouses.
That's warehouses.
Shipping vehicles.
That's all the technology and equipment and infrastructure that goes into a warehouse. These warehouses are automated. They're massive. And each one of them is expensive. I think Amazon has close to 100 fulfillment centers across the United States.
Compared to what, about 20 for Walmart?
Walmart has about 20. And again, as we've been talking about on previous episodes, that's what really has been hurting Walmart is they're spending $1 billion, they're losing $1 billion a year. That means they're spending more than $1 billion a year on infrastructure, but they're losing $1 billion a year
on their e-commerce
net on e-commerce because of the infrastructure investments that they need to make. And as we've said, that's the right decision for Walmart to be making. And basically what you're seeing is Walmart was getting some flack for that. Amazon just doubled down and said, okay, well, yeah, Walmart's getting flack for losing $1 billion on e-com. Well, I'm going to double down and have and increase my cost profile by 20% to invest in one-day delivery. Now, here's the other interesting thing. What they also said is that revenue rose 20%, and analysts expected there to be a 17% rate of growth. So what they're saying is that they see a correlation between having one-day delivery,
that infrastructure investment and revenue growth,
and then the corresponding increase in demand, basically, and that consumers want it. They like the one-day delivery, so Amazon's going to chase that.